Good day, ladies and gentlemen. I am Sauradeep Sarkar, the moderator of this call. Thank you for standing by and welcome to Hindustan Unilever Limited March quarter and full year 2012 and 13 earnings call. For the duration of presentation, all participants' line will be in listening only mode, and we will have a Q&A session after the presentation. I would like to now hand over the conference to Mr. Dinesh Thapar, General Manager, Investor Relations. Over to you, sir.
Thank you, Sauradeep. Good evening and welcome to the March quarter 2013 results conference call of Hindustan Unilever Limited. As always, we have this evening with us Mr. Nitin Paranjpai, CEO, and Mr. R. Sridhar, CFO, on the call from the HUL end. As is customary, we will start with the presentation from Sridhar, where he shares aspects of our performance in March quarter, and then hand over to Nitin for him to share his perspectives on the business performance. Before we start the presentation and hand over to Sridhar, I would like to draw your attention to the safe harbor statements included in the presentation for good order's sake. With that, thank you, and over to you, Sridhar.
Thank you, Dinesh, and welcome everyone to our results call for March quarter, as well as the financial year which ended 31st of March. Before I move forward, just to set the strategy, as you know, the strategy of the company is enshrined in what we call Compass, which is a strategic framework. Our business philosophy, business model is outlined in the Sustainable Living Plan, and our goals remain unchanged, which is about delivering growth that is competitive, consistent, profitable, and responsive. So, no change in our strategy, no change in the goals that we are trying to deliver. Before we go into the performance of March quarter, a few words around the business environment in March quarter. FMCG markets continued to grow in March quarter. However, we did see moderation in both volume and value growth across several FMCG categories. This was particularly pronounced in the modern trade channel as well as in discretionary categories overall. Further, price growth in the soaps and detergents categories has been fading in the market. The environment related to input costs was overall fairly benign. However, competitive intensity remained high during the quarter. To give you a flavor of the input cost environment, the four key drivers that are shown on the chart, you will see that while Brent crude remained broadly at the same level sequentially versus December quarter and slightly lower compared to March quarter, North Indian tea continued to show an inflationary trend. On the other hand, palm oil was distinctly weaker and softer both relative to the prior quarter and the prior year. Exchange rates have clearly stabilized, though on a one-year basis there seems to be a depreciation of about 8%. So overall, input costs were fairly benign. In this environment, I think we have delivered growth that is consistent, that's broad-based and competitive, and delivers an improvement in margins. Our domestic consumer business grew by 13%, with underlying volume growth at about 6%. The reported underlying volume growth includes the impact of the upstocking at end March in preparation for the transport strike. Stripped of this, the underlying volume growth in March quarter would be around 5.5%. Our home and personal care categories grew at 13% in the quarter, while our foods and beverages categories grew by 15%. Operating margin expanded by a further 60 basis points. This is after taking into account a step up of 90 basis points in our A&P spends. This operating margin improvement is also after absorbing the increased level of royalty costs, which kicked in from 1st February. Estimated impact in this quarter is about 30 to 35 basis points. Profit after tax before exceptional items showed a healthy improvement of 18%. If you look at the next chart, which is really about the four key segments, I think this broad-based growth with soaps and detergents and personal products growing at more or less similar levels, Beverages continues to be the star performer, and we'll talk a little bit more in detail later, while packaged foods growth was modest at 7%. As always, innovations continue to be a key contributor to our growth agenda. You can see on this chart examples of some of the innovations we brought to market, and you will observe that these are spread across a fair number of categories, whether it is deodorants or skin care or hair care with the Dove hair therapy launch, or in the oral care where we expanded our toothbrush portfolio, and a couple of offerings in our ice cream category in preparation for the summer season. Alongside innovations, we also had some impactful activations in this quarter which is worthy to call out. In the case of Lifebuoy, the activation at the Kumbh Mela is something that you might have picked up in the external media, reminding consumers the importance of washing hands with soap before important activities. So this was quite a big event at the Kumbh Mela in 2013. Another example from the same event was the activation which was led by the Close-Up brand of helping people with what is called human tags to find young children, etc., who might have found themselves somewhat lost in this Kumbh Mela. I'll now move to give you a flavor of the performance of individual categories and start with skin cleansing first. Broad-based growth in the quarter led by volumes. In fact, our key brands Lux, Lifebuoy and Dove all delivered double-digit volume growth. As I mentioned earlier, pricing in the quarter was flat to negative. This is really the impact of softening palm oil prices being passed on to consumers. In terms of the segments of tomorrow, we continue to strengthen our body wash portfolio with the relaunch of Dove body wash during the quarter. Moving on to home care, which delivered double-digit growth across formats. In laundry, growth was led by the premium segment with both Surf and Rin delivering double-digit volume growth. Surf performance was led by the Surf Easy Wash relaunch which took place towards the end of 2012, and Rin was led by a strong performance in our bar business. In the case of Wheel, which we had called out last time as an area needing attention, happy to say that the performance has improved in the quarter with actions underway to step up further. Household care continued to deliver strong performance led by Vim. Moving to skincare. Skincare, as we had mentioned last time, is one of the categories clearly where market growth has seen slowdown as discretionary consumption has been impacted. Notwithstanding the significant slowdown in the market, we have seen strong double-digit performance from two of our large brands, Pond's and Lakmé. Pond's led by Age Miracle, which sustains a strong growth momentum, and Lakmé led by Perfect Radiance. Fair & Lovely is holding share, its very, very high shares, in a segment of the market, which is the mass skin lighting segment, which is clearly showing very slow levels of growth. The face wash portfolio was expanded further with new offerings in both Lakmé and Pond's. Hair care continued a good momentum of growth with strong volume-led double-digit growth. Sunsilk, Clinic Plus and Dove grew very strongly led by bottles. In Clinic Plus, clearly the relaunch in the second half of 2012 is continuing to deliver strong results, while Sunsilk growth was stepped up on the back of impactful activations. Dove saw the range being strengthened with a split-ends variant being launched in the quarter. Tresemme, which we launched in September quarter last year, continues to perform well and gain ground, while conditioners had one more successful quarter. Dove Elixir hair oils, which we had launched towards the end of 2012, continues to show good performance with the response from consumers being positive. Overall, hair therefore a very strong quarter. Moving on to oral care, we have seen broad-based growth across the portfolio, across both Close-Up and Pepsodent, with the core parts of Pepsodent Close-Up stepping up their growth performance. In toothbrushes, while on the one hand we rationalized the portfolio, we also launched a premium offering of Kisson Expert Protection toothbrushes. Moving on to the foods and beverages section, in beverages, we've seen good growth momentum over the last couple of quarters, and this has been sustained in March quarter as well. Tea sustained its strong growth with broad-based growth across brands. All of the brands grew in double digits, and Taza in particular performed very well on the back of a strong marketing mix. Coffee maintained its double-digit growth momentum. Coming now to packaged foods, the growth was led by Kisson and Knorr. Kisson, in particular Kisson ketchup, grew very strongly with the new Inspire campaign resonating with consumers. In Knorr, we saw further acceleration in growth on the soup portfolio. Knorr Soupy Noodles, which we relaunched at the end of December quarter, has received encouraging response from consumers. In our ice cream business, Quality Walls registered modest growth. This is a continuation of December quarter last year, and is clearly reflecting the slowdown in the marketplace. Nevertheless, we have got ready a series of exciting innovations, some of which were launched at the end of March quarter and some of which goes into the market in April to leverage the onset of the summer season. Finally, Pureit. Pureit continues to grow, but in a slowing durables market. In this market, Pureit has strengthened its market position, and innovations are clearly a key driver, with the recent Pureit UV launch being well received. Our service standards are a clear differentiator that are helping the brand through what we call the Pureit promise, and our focus on in-market execution continues to progress well. So that's a quick summary of each of the categories. Looking at the financial performance, which I'm sure you've seen the results already, it's really a strong performance in our domestic consumer business, both in terms of top line as well as in margins. To give you a sense of how our operating margin plays through to net profit, you can see the various line items in the chart, and essentially it's a reasonably good story all across, with financial income stepping up, aided by dividends from our subsidiaries. Exceptional items in this quarter was modest, and tax rates have gone up from what was 21.5% in March quarter last year to 22.8% for this quarter. Just to say that the overall tax rate for financial year ending March 13 was 24%. So in summary, if you look at March quarter, we would call it out as being a quarter which has once again demonstrated broad-based growth and profit improvement, with 6% UVG underpinning the 13% growth in domestic business, and margins improving by 60 basis points after absorbing a step up in A&P and the new royalty arrangements. I'd like to just spend a couple of minutes on the highlights for the financial year. If you look at the summary highlights, it's another year that has delivered on the key goals we called out. Our domestic consumer business grew by 16% with a strong underlying volume growth of 7%. In absolute terms, the incremental turnover that our consumer business has added in this financial year is a very substantial 3,300 crores. The growth has also been very profitable, with operating margins now just shy of 15%.